everybody. It's Friday, the 25th of February, 2022, and these numbers here on the screen don't come anywhere close to telling the story of the market this week. We were up pretty much across the board, but again, these numbers really don't mean much of anything, so let's just look at the charts and try to make some sense of it here. In the S&P 500, I had pointed out a couple times on Twitter that one of the levels of interest that was significant was the volume-weighted average price off of this peak from September 21st of last year, and that was pretty much the precise low where that market fell to, and then on Wednesday, on Thursday that is, and then as the buyers gained control, they maintained control with the volume-weighted average price for that day, providing support on these first 5-6 pullbacks before the market really took off. And then, of course, what we saw is a continuation of that rally, and what we're looking at on the 30-minute time frame is here's that volume weighted average price from Thursday. This is today's volume weighted average price. So you can see the buyers maintain control once again, and we made it right up to the volume weighted average price from this gap, also pointed out on Twitter earlier today and yesterday. The next levels of interest that have the potential to become resistance are, one, the volume weighted average price from the January 24th gap lower. That's been a significant level, and then the month to date volume weighted average price is that pink line. So really this range in here, about 439 to 441, that's also, approximately where we'll see that 20-day moving average. Currently that 20-day moving average is at about 443. That'll, come down and probably meet the market there on Monday or Tuesday of next week if we see continued follow through. Very impressive strength off of this, and as is often the case, counterintuitive to what the headlines suggest. There's a phrase out there, I'm probably not getting it right, something about the build up to war they sell, and then as soon as the first bombs drop, that's when you buy, and that's exactly what happened. Besides the people who panicked on the open Thursday morning and threw their stocks away, the market rallied extremely hard from there. So where are we overall? What can we expect from this market? I think that we've got very mixed messages. We've got a lot of global macro events going on. We're still in earnings season, so it's still, I think, a time to be very cautious overall, to be skeptical and keep a shorter term time frame approach to this market. And again, I speak always from a swing trader standpoint. If that's not your time frame, then you'll probably disagree with what I'm saying. I don't believe in buy the dip. I think it's a foolish strategy. Once in a while you get lucky, but most of the time you don't. So again, I speak from a swing trader standpoint. I encourage you to do what's right for you. Also overhead, we have the 200-day moving average, this line right here, and the year-to-date volume-weighted average price. So if we can make it above that 441-ish area, then these two levels will also become something that we'll want to keep an eye on as far as potential resistance. It might be tempting to short this market, but again, we're above today's volume-weighted average price. We're above yesterday's volume-weighted average price. You don't want to short in those conditions. What would a bearish scenario look like? Maybe it rallies up to there and then perhaps even through it a little bit and then continues to let me get my drawing tool straight, do something like this. And then what we would see is, this volume weighted average price would start to do this. Monday's VWAP would look like this. Then maybe on Tuesday, it starts to break down, comes down and tests the 5-day moving average and the VWAP off the low. Keep an eye on the volume weighted average price off the low next week. If we see pullbacks, it's likely to be a level that's at least temporarily defended in a place where the buyers have the potential to regain control on such a pullback. But you certainly don't want to be chasing things. Obviously, it could have worked here the last, chasing the stocks higher today would have worked. But, it's all about, can you repeat that process, not whether it's a one-off event. By the way, if you're watching this on YouTube, thank you for watching. Please leave a like, a comment, whatever you want. But also be aware that on Sunday night, this Sunday, the I guess that's the 7th, at 7 p.m. Eastern, and I'm not sure that's the correct time, I'm going to be doing a live webinar. It's a free webinar, and I will have the link on Twitter as well as on alphatrends.net if you want to join in. I'll be talking about the markets and some trade setups for next week. So it's free to join. It's first come, first serve. I'm not sure if it's going to be recorded, probably, but I don't know. The Nasdaq also, hit a couple key levels in here. It came close to the volume-weighted average price from the COVID low, and let me just color this other one. Instead, what it did was it came down to, and I thought it was more likely to hit the volume weighted average price from the COVID low, but this is what I always refer to as an anchored VWAP handoff, where we saw the test of that volume weighted average price from the low right here, and we put another one off of that. That's something I discuss all the time. That was pretty much the low on Thursday, and it's not necessarily a buy there, but as I always point out, there are a level of interest where we want to look at shorter term time frames for evidence that the buyers are gaining control. And clearly, if you were looking at a shorter term time frame, maybe a 2-minute time frame, initially in the morning I look at a very short term time frame, and you can see that the buyers defended that volume weighted average price on these first two pullback tests. It was a beautiful pattern of higher highs and higher lows, with buyers coming in and defending that level. Today's volume weighted average price also, we had a little bit of first hour or so of a little bit of pullback, but then the buyers regained control in here as well. The key levels in this market are similar in that we have the volume weighted average price from the January 24th low up here, as well as the month to date volume weighted average price. Those kind of come together at about 350 to 351. And over to the daily time frame, you can see above that we have the volume weighted average price from last year, which had been significant previously, and the 20-day moving average, both in that 351 352 level. So that's likely to be a level that will provide resistance. We don't know if it will become, but it certainly has the potential to become resistance. It's a level of interest where we want to look at it and say, if it begins to slow down in there, you want to raise stops on any longs that you have that are profitable, and even maybe decide to cut some of the losers that you've been holding on the way down. The Russell 2000 came down again precisely to the volume weighted average price from the COVID low. There is absolutely, well, actually I shouldn't say there was nothing else there to indicate that buyers might be gaining control, because I did that incorrectly. Let's look at the Fibonacci. It also came down to the 38.2% retracement of this rally. So from this low to this high, it pulled back 31.8%, a Fibonacci level, and again also touched the volume weighted average price from that low almost precisely. I mean, you just can't make this stuff up. There is clearly evidence that there's buyers waiting in the wings at these levels. If you don't believe it, please just unfollow me, because I'm writing a book about it. You're going to want to read it because it's absolutely going to convince you. The volume weighted average price for the year in the Russell 2000 is just overhead. This is likely to be a battleground at about that 203 level, and that's that pink line there. Above that we have the declining 50-day moving average. But clearly this market, the Russell 2000 is not a healthy market. We have this bigger prior support in this area that the market is stuck under. That's not a healthy market. Semiconductors, they did recover here, and as far as their key volume weighted average price levels, it was also pretty much the September 21 high that I had pointed out in the Nasdaq right here. This is the semiconductors, and that level we had seen previous tests, and these arrows show that I've been talking about it for a while. We dipped a little bit below that, but then buyers came in right around that area. There was nothing else in that area to indicate that buyers might show up, and same story. This market, we saw that the volume weighted average price from Thursday, buyers defended initially, and then we ramped higher. We have that volume weighted average price from the January, let's switch to a 30-minute time frame, from the January 24th low right here. This has been a key battleground. When we draw this little box around it, we have that battleground is support, then resistance here, support broken, resistance, and now we're testing that again. Just overhead, this pink line is the month to date volume weighted average average price. So we're getting into an area where we also see the 20-day moving average right there. That's that thin blue line, and the 200-day moving average in this area. So again, don't be foolish and chase these things. If you're going to, trade, let's say, the semiconductors today, well, how do you do that? Well, you want to look at it and say, from today's volume weighted average price, you want to get involved maybe as it makes a higher high above the flat to rising volume weighted average price. That would mean, and again, we're looking at a 2-minute time frame here, that would mean buying it, right here, and then setting your stop under here or under one of these lows. And if you want to, scalp it for a very short-term trade, that's fine. Otherwise, you can hold it and, maybe raise your stop up. But whatever you do, you don't want to let it drop all the way down to that 5-day moving average. And, and it's not necessarily that it would work like this, but maybe it runs up to that month to date and slightly through it, then kind of does, the same thing I had previously outlined. It pulls back down, finds the 5-day moving average flattening to turning higher. The volume weighted average price off the low kind of comes together, though that area in there has the potential to become support. I wouldn't stick a bid in right there, but I would start to look at the shorter term time frame, and if it was starting to make shorter term, break higher, a higher high right in here, and then set my stop underneath that low, that could be a good way to trade it on the long side. The biotechs did bounce this week. As we know, they've been the real dogs this year. They had broken the previous low right here, which spent a day and a half below that, and it's still a severely broken market and due for a rally. We're in a downtrend though. We get strong rallies in a downtrend. That's the hallmark of a bearish environment. And again, we have a lot of mixed messages from the economy, the global macro, etc. out there. Financials, kind of a waste of time in this range. I don't really trade financials, so I'm biased in that regard. But we kind of see the same levels. The volume weighted average price from the January 24th low right here, the volume weighted average price month to date and off that high coming together, saying that it's likely to slow down in this area. Energy names, they've been pretty resilient. They came right down to the year-to-date volume weighted average price, touched it precisely. Not a coincidence that buyers were waiting in the wings there, as they often do at significant levels. So there was nothing else there telling you that that was a potential level of support. Anyways, I'm going to end it here. Again, thanks for viewing, and check out alphatrends.net or Twitter. I'm Alpha Trends, of course, for if you have any interest in that free webinar.